Welcome back to Solutions for Financial Independence. Joining me now, John Halterman with Beacon Wealth Management. How are you doing, John?
Doing fantastic. How about yourself?
Doing well, thank you. This week we have a question from Keith in Morgantown. He says, do you consider asset allocation an effective way to manage investment risk?
You know, asset allocation is really about diversification. And what is diversification? What it really means is that you're holding different asset classes. And what I mean about an asset class, let's say stocks versus bonds versus fixed accounts. And the whole idea is that you're dividing the pie amongst different things so that not everything moves in the same direction at the same time. But what we found out in 2008, there's going to be some times where things do move in the same direction at the same time. And so it is a way to diversify and reduce risk, but would I call it effective in the most critical market recessions? I'm not really sure. Now, the one thing I do believe is that if you have a 25 to 30 year window, that in the long term, the asset allocation will balance things out. But in the short term, what you have to remember is part of your portfolio is always going to be losing money, and part of your portfolio is probably going to be building money. And so it's definitely a balancing act. Now, when I think of effective, what I'd like to see is I would like to see people be more tactical. And what I mean about tactical, I think the first decision a person has to make when it comes to investing money is we got to determine, is there an opportunity to make money right now, or are the risks too high? Because if we think the markets are bad, and as an example, in this last 6 months, we've really kind of been on the sidelines. And while the markets have been super turbulent, we've had people make positive returns because the first decision was we felt the market was too risky. And that's what I call tactical investments, where you're making decisions on a daily basis. And you may not make changes daily, but you're making a decision of should we be in versus out. And then if we're in, then where, which is a whole nother discussion. But going back to the asset allocation, yes, over the long term it can help, but in the short term, if you're a retiree and you're taking income, just because you're diversified will not mean that you won't lose money.
All right, thank you so much, John. Folks, if you missed any of that, you can always find it online. Don't go anywhere. Much more for you after the break.